a thunder and tumbleweeds landscape where you get massive volume action, all participants participating, which results in very flexible, very flexible price action, plus follow through and liquidity. And then every day, ultimately, you're going to get that dry climate that comes in where the liquidity pretty much just evaporates. All right. For those of you who are, who are trading today, if you looked at what is it, Dollar General? No, Family Dollar. Family Dollar. That particular stock made a nice spike off 67, what 64.50. Family Dollar. Was it Family Dollar? No, I'm sorry. It was Dollar General. No, it was Family Dollar. Anyway, it made a nice spike this morning, right into the ahead of the conference call, and then the liquidity just completely dried up. It's just, that's just the name of the game right now. It's the thunder and tumbleweeds landscape. All right, so a little bit about me. I've been around for over 15 years, been around since the So's Bandit days, put multiple books out. And Mbae, thank you for the comments in the book. Trading for Full Circle was for me, I thought that was going to be my last book, because writing books is like giving birth. Okay, I didn't know what giving birth was until I started writing these books, and it's painful. The reason I put out Way of the Trade was because the adage, the flaw doesn't lie in the game plan, it lies in the execution. That can be applied laterally across any endeavor, and especially to trading. And therefore, it's the actual tactical applications of applying the methods, okay, that really separate or make the difference between profits and losses. And within the 3 years between Trading Full Circle and Way of the Trade, a lot has changed. Now, a lot has changed, okay, and they say the more things change, the more they stay the same. A lot has changed in one sense, but it's right back down. It's still the same game. The same game, it is a game of transparency and keeping the transparency away. And by the time it becomes too transparent, it's too late. As they say at the poker table, if you don't know who the mark is, you're the mark. All right. Back in the old days, the good old days, in the 90s, it was Instinet terminals. Now it's dark pools. And the volume is floating away from the major exchanges. Okay, almost 40% of the volume is now done off exchanges, including the dark pools. So, and I'm sure you guys have all heard of HFTs, high frequency trading programs and algorithm programs, right? These HFTs and algos, they're there every day. Okay, now they had their heyday in 2011, and then the regulatory agencies are looking into them. So, that boom bust cycle happened, but they're still there. Market makers use them every day. Those of you who watch the VWAP, on big gappers or dumpers, it's not as applicable, but understand market makers, when they're filling these institutional orders, the institutions, they look at the VWAP. And if they're getting filled on their longs, way above the VWAP, they're going to be upset. They think they got ripped off. So market makers have volume participation programs that will come in and spam the bids and spam the asks to get it close to that VWAP. Okay, and that's why you get a lot of these reversions and these oscillations throughout the day. So it is a very it's a computerized market environment, and if you have the right training, okay, you'll be able to game the algos and the HFTs. And I'll get more into that in this webinar. So anyway, these are the books that I published. I did an interview for the December issue of Stocks and Commodities magazine. So if you guys get a copy of that, I'm in there. And let's go ahead and get started. In this webinar, I'm going to go straight into an example of a trade, okay, an earnings gapper or dumper trade that we pretty much do every day. And it's, like I said, most wonderful time of the year is that earnings season because you've got gappers and dumpers. And whenever there's a big gap or a big gap, well, whenever there's a big gap up or a big gap down, you've got one side that's pretty much trapped. You got the other side that's trying to push. And it's a push and pull environment. And all we're trying to do is just grab, step over the corpses, not step on landmines, and pretty much just loot what the big boys leave behind. So we're going to go over a trade sequence in detail. Now, I want to once again say that this stuff that I'm going to go over, okay, because I'm sure you guys don't want to hear the same templated stuff in this webinar. All right, we appreciate you guys taking the time out of your day to listen to this webinar. So I'm pretty much going to go into a detailed explanation of the trades and the mindset behind it and all the thinking that's behind it. Now, I want you to understand that for a lot of you, it may be over your heads, okay? But that's fine. It's just this is just to get the synapses firing and to get that mental metabolism fired up again so that you do seek to learn. Okay, and this learning process, this enlightenment process, this is the true evolution of a trader. Understand that when you see the surface results, performance results, or someone posting a big trade on Twitter, okay, you're seeing just the tip of the iceberg. And this example applies laterally, okay, not only just with trading, but to the markets, to everything. An iceberg, most of the time, well, everyone sees the tip of the iceberg, okay, but 80 to 90% of the iceberg is under the surface. And one of our sayings, okay, is to be aware of the surface, okay, but know what lurks beneath. And as a trader, when you just look at the results, okay, or when you just want to piggyback another trader, there's a problem with that, okay, because you're focusing so much on this part that when outliers happen, okay, and when exceptions to the rules, and when circumstances change, you're not able to maneuver fast enough, and you end up drowning. And through my over 15 years of running Underground Trader, this is what I've noticed. It always pains me when people tell me, hey, I'm motivated and I want to learn this and blah, blah, blah. And they think that staring at the screens all day and just hitting, just clicking that mouse and buying and selling all day is, putting in your time, but it's not. And it's beyond that. You have to build a galvanized foundation down below. For lack of a better word or explanation, when you do this, what that does, when you build the foundation, okay, that's like, for those of you who know what a cast iron pan is, okay, it takes time. You have to season the pan. You season it through use. You got to oil it, heat it up, oil it, heat it up, oil it, heat it up, and just build a layer, okay, of lubricant. You got to seal it. That's what we call seasoning. It's the same thing for traders, okay? Traders have to start off and build that galvanized foundation from below, slowly and gradually, okay, and seal each layer to build up that galvanized foundation so that when you break the surface, to everybody else, they see the result. To everybody else, it looks easy, okay? And I guess that all goes right back to the transparency of the markets, because if people understood the time that it took to get to that level, right, they might think twice about jumping in, okay? So this is what it boils down to: building the galvanized foundation and being aware of what lies ahead and being prepared okay, for what lies beneath. So we've narrowed down a lot of things when it comes to the training. And when you make a trade from the beginning to the end, the buy to the sell, or the sell to the cover, okay, it's what we call a trade sequence. And one of the things with Alpha 7 Trading, or Trading Academy, the training has to do, one of the elements is the notion of segmenting, because there is information overload out there. They say you can get all this information free on the internet, and you are more than welcome to try. If you got all that time, go for it. Okay, but through my years, I've realized you got to break it down. Okay? You can't take everything all at once. You can't ingest everything all at once. You got to break it down. And when you repeat, okay, a series of actions enough times, right? That's what we call, a sequence. And then the more you repeat that sequence, eventually it becomes a template. And the more you use that template, okay, an interesting thing happens. You start thinking in that sense of, hey, let me segment it, let me get that sequence down, and let's create another template, and another template, and another template. Now, whether you know it or not, you're already doing that. And when you get enough templates, well, basically all your templates put together is called a behavioral pattern. Okay? That's basically how people behave. And it doesn't just apply to trading, it applies to everything. So when it comes to the trading, though, what we want to do is we want to narrow it down to the trade sequence simply composed of 3 parts. Okay. Now, whenever I say simply, you better understand, I am talking tip of the iceberg. In fact, this whole webinar today is just the tip of the iceberg. In other words, you're going to see the trades play out. I'm going to explain it to you, and that's the tip of the iceberg. But understand, to get to that level, okay, that's what lurks beneath, and that's what people don't see. So the trade sequence is broken down into 3 parts. The pre-trade, it's where you have your premises put together, you get your patterns set up, you got your support resistances, okay, and your trigger. When you're in the trade, you're monitoring, okay, you're monitoring the macro markets and seeing how your position or positions are correlating with the macro markets, watching the peers, okay, if the correlation is strong that day or weak that day, etc. And then the post-trade, after you're out, okay, you got to go back and you got to review it. And I'm not talking about going back and beating yourself up. Okay, there are very specific rules. There's a big difference, between someone taking a 1.5 out of a trade and someone taking 30 cents out of a trade. Well, on the surface, you may say, well, the guy who took the 1.5, man, he fared better. It's not necessarily the case. Okay. A seasoned trader, a seasoned scalper, okay, may have jumped in on a perfect storm. And in that 30-cent scalp, he may have gone 3,000 shares, following the risk and probability dance routine. Whereas someone else may have taken 200 shares and followed the rules, okay, and ended up with a 1.5. But sat through a whole bunch of wiggles, but that may be his temperance or her temperance. Okay, so you can never judge it right from the numbers. You can never judge it right from the surface. And I want you guys to get into that mentality. Never take anything for face value. All right. One of the big missteps with earnings season is people sit there and try to analyze the numbers. I got news for you. It doesn't really matter. The Rock says, what do you think about Shields? It doesn't matter what you think. It really doesn't. Because we're not in the game to analyze numbers. We're in the game to gauge and to game the reactions. Simple as that. We're going to play Shield tomorrow morning. I'm not even looking at it now. Okay? Doesn't really matter in the post-market. Gonna do the morning routine tomorrow morning. Gonna write down the bumpers, wait out the first 5 minutes, and then we're gonna hit it. It's gonna be one of the five earnings patterns. All right, same thing that we did with Family Dollar this morning. So, you know, it is what it is. You know, found a niche, and that's what we're going to play. So anyway, going back to uh, the trade sequence on 12/20, CarMax came out and they gapped down on an earnings report. Okay, so right off the bat, we know a few things right off the bat. CarMax gapped down on earnings report. I just said CarMax continued to break down after the open. All right, and then at the end of the day, CarMax formed what's known as an end-of-day dumper perfect storm setup, and that's one of the proprietary patterns that we have in the Alpha 7 training course. But basically, when a stock gaps down, if it can't bounce, okay, if it can't bounce through certain bumpers, and when I say bumpers, I'm talking about the 5, 15, 50, 200 period moving averages and the Bollinger Bands, okay, on multiple time frames. But when it can't break through certain bumpers, by the end of the day, the fund managers who are still long the stock or have a significant position, they're going to start to panic. And then that's where you get a second play on the dumpers, because if the stock can't bounce, the fund managers want to get it off the books, and especially near year end, okay, which is what really applied to CarMax. Okay, but the bottom line is that you have to think about the psychology of the other participants out there. Okay, it's not, what do I think the earnings, how bad are Shield's earnings? Okay, it's how bad does the market think the earnings are, and how trapped are the longs, and working off that. So pre-trade on CarMax, it gapped down, like I said, earnings report. The longs got trapped, okay, and the end of day perfect storm set up. Now what I'm going to do now is I'm going to show you the video. If I can get this started. Okay, and this is the live action video of CarMax. Now let me just pause this right here. All right, so CarMax, this is the end of the day. All right, this is on DOS Trader platform. Okay, ChoiceTrade has the DOS Trader platform. What we have up here are what I call the rifle charts, and I've painstakingly put these together through the years. And they're composed of very simple household ingredients. A pup is a power uptick. Well, let me go over the rifle charts first, and then I'll explain it to you. So sit tight, Mike. So with the time, all right, so, and once again, right off the bat, let me tell you guys, you're not going to understand a lot of the stuff that I'm going to tell you, okay? You're not going to understand it. If you do, excellent. If you don't, just follow along. Because the reality is that it should stir you up, your synapses, and get you thinking. Go do your research, whatever, all right? And we've got the training and everything for you if you can't find it. So going back to CarMax, okay, by the end of the day, first of all, let me break down the charts. You got the 1, 5, 15, and the 60 minute. Okay, these are the intraday charts. I always put up the SPY, all right, because that's going to be your measuring stick. It's a benchmark index. So how do you know if your stock is out, trading good today? Well, if the SPY's down and your stock's up, it's trading good. Okay, that's pretty much the benchmark. And at any given time, the correlation, 70% of your stock's movement, it should be based on the SPY. So that's why, if the SPY is taking a collapse, if it's down 20 handles, or the future's down 20 handles, which is like $2 on the SPY, your stock is likely going to be trading down. And it's got nothing to do with your stock on an individual stock basis. It's just how the market works, because it's all connected. And especially if it's a S&P 500 component. So CarMax, like I said, throughout the day, it just could not bounce back up through the 5-period moving average. And when the 5-period moving average cannot break and rejects, it forms what's known as a mini inverse pup. And when you get a mini inverse pup, okay, that tells you that you've got more downside. So as we get closer to that last hour, I'm watching CarMax. You got multiple time frames, and this is all a game of time frame convergence. You see, one of the things that confuses traders a lot is when someone says, well, CarMax is in an uptrend, okay? And it's not, you're not being a stickler when you break it down, because CarMax can be in an uptrend on a daily chart or a monthly chart or a weekly chart, okay? It can be in an uptrend on a 1-minute chart, but be in a severe downtrend on a 60-minute chart. Okay? Be in a downtrend on a 15-minute chart. So I know that that gets confusing. Well, if the 1 minute's up and the 5 minutes in a downtrend and the 15 minutes up, what am I supposed to do? Nothing, okay? You're not supposed to do anything. It's when you get the convergence, it's when you get the time frames aligned together, the charts aligned together in one unified direction, that's when you're going to get that clear, transparent move with the follow-through. Okay, that's what you want to capture. Now, it may take 3-4 hours and sitting through 3-4 hours during the day to capture that. Okay? Or, you know, every morning has a wet climate. That first 45 minutes, hours of action gets done in minutes. And that's the difference between a wet and a dry climate. A dry climate, you get a bunch of chop. Okay? The compass and the correlation with the benchmarks, the benchmark index, SPY. Okay, that correlation can go out the window for a while, especially if the SPY is not doing anything. But when the correlation is there, you can determine whether a stock's got a buy or a sell fade. So with this trade, this is what's known as a 60-minute mini inverse pup. And Mike, to put it to you in the most rudimentary terms, when the 5-period moving average, when it tests and rejects, okay, and the stochastics does this little hook down, that's called a mini inverse pup. On the flip side, take a look at the SPY. Look at the stochastics, see the spike, you see the pullback to the 5, it doesn't break, coils back up, that's called a mini pup. The beauty about pups is they form on the stochastics, but they utilize the moving averages as a roadmap, okay? And it's market tested. So it's not like I'm making any kind of a prediction. The market has actually spoken. The market has actually tried to push it down, and it could not. And so the bears get squeezed, and the bulls jump in and squeeze it higher. And thus, your mini pup. Mini inverse pup, mini pup. So, looking at this CarMax, you know, as we head closer to the last hour, we go ahead and we short 300 shares, a small amount, okay? Because here's the problem right now as it stands. Remember how I talk about time frame correlation? Well, you look at the 5-minute, you see the stochastics are up. You see the 15-minute, and you see that the moving averages are flattening out, and the stochastics hasn't quite made a decision. But you see, when I look at the 60-minute, this is what's telling me what lurks beneath. Remember the iceberg? This is telling me what lurks beneath. And what lurks beneath, okay, is this mini inverse pup. Now, in order for the 60-minute mini inverse pup to actually come to fruition, it's going to need the participation of the other 3 time frames. And this is where we enter the law of foreshadowing, like a Doppler effect. Right now, it's sunny outside, but my Doppler radar is telling me that there is a potential thunderstorm, potential tornado coming, okay? That's the beauty of utilizing multiple time frames and splicing up that the your view, trying to get a panoramic view. This is the most surface area, less surface, mid-range, and what lurks beneath. So when I see that mini inverse pub, first thing I want to do is measure that 5-period moving average. Now, if we break through, okay, all bets are off. But if it holds that resistance, okay, then it's got to hold it long enough for the shorter time frames to exhaust the momentum bounce attempts and then come back down. So for now, we take a small short, and this is a tester short, because 48.10, 48.20, that's going to be your 60-minute 5-period moving average. Notice what time it is, 2:37. Okay? Remember, this is all a game about catching transparency. The machines aren't dumb, and people catch on fast, too fast. So everyone's expecting a 3 p.m. dump. So what's going to happen? They're going to step in earlier, right? Now, the 5-minute has a mini pup. In other words, this is your downtrend. When they break the 5-period, which is in yellow, they pull it back and they hold that yellow as it slopes up. That's what your mini pup is. So this is showing some bullishness. 15-minute is stalled, and the 60-minute, that's still in a mini inverse pup unless it breaks through 48.20 and holds that area. Well, with 300 shares, we're not too worried about that. Okay, that's the other thing. You've got to make sure that you're comfortable with your size. So now we look at the SPY, and we realize the SPY, it's stalled out. It's pretty much in a contracted Bollinger Band on the 1-minute and the 5-minute. Okay, and we could be coming up to a peak. So this is all jockeying pretty much ahead of the last hour, but I don't have all 4 lanes coming down. And very simply, I don't have 4 stochastics that have crossed to the downside. Now remember, this game is about finding the transparency and reacting on it before it becomes too transparent. When it becomes too transparent, well, the move has already been made. And you end up chasing that liquidity. And when you chase that liquidity, you end up shorting too low. You end up chasing too high, right? And you may get a couple upticks, and then what happens? Right back the other way, okay? And there's a reason for that. And you can blame the algo programs for that. You can blame the HFTs, because what did they do? They steal liquidity. They want to take that liquidity from you, ahead of you, and then they want to ransom it out to you at the highest price. Okay? So we have the 1-minute trigger, 1 minute's coming down. Now the 5-minute's starting to stall out here. 60-minute still has a mini inverse pup. 15-minute is on the fence. Okay. Do you guys watch the Brady Bunch? It's pretty much like the Brady Bunch. This is like little Mikey, right? There's Peter, there's Mom, and there's Dad. Okay, and that's a good illustration, good analogy of the strength of these charts. So, as we watch the 1 minute, okay, we're watching that 5-minute also, because that's going to be very critical. This can't happen without the participation of the 5-minute, okay, and the 15-minute for that matter. Now understand that, after the open, by the end of the day, you're going to get a lot of chop, because it's not fresh. Okay, they're not fresh, robust ranges. So most other stocks out there that don't have news, or they're not gapped up or down on earnings, all right, they get very, very rigid as far as the price action, unless a SPY really takes off or really rug pulls hard. That's why, like I said, I love earnings season, because when you get these big outlier gaps up or down, okay, you're insured 2 things. You're insured action, volatility, okay, on the open. In that first 45 minutes, you're insured that. And a good chance of action and volatility in the last 90 minutes. Now, normally I would say the last hour, but like I said, everyone's trying to leapfrog everyone else. So you get people trying to pretty much game it ahead of time, just like we're trying to do here. Okay, we're trying to watch it early. So we're in short 300 shares. Okay, at what is it? 48 average cost. Now, at this point, what's our premise? First and foremost, the anchor premise is the 60-minute mini inverse pup. It's sunny right now. It's sunny. Starting to see a couple clouds, but I'm expecting a hailstorm, a thunderstorm, as we get closer to the last hour. Now, if the 15-minute was firmly crossed up, I think twice. If the 15 and let me put it to you this way: if the 15 looked like the 5-minute right here, okay, then I wouldn't be stepping in early. But the 15-minute is stalled, and as far as the 5-minute, it's coiled up. And you got to understand, it's not just one tool, okay? It's the cumulative effect of using both tools, or the moving averages and the stochastics. Because let me tell you, the stochastics, you will see a full oscillation on a 70, 80-cent price range, okay? And you'll see the same full oscillation on a 20-cent price range. The stochastics can't distinguish between the price ranges. When you look at the price ranges, that's when you're going to see, oh, wait a minute, a full oscillation or a mini pup. But look at the channel. It's contracted. Look at how tight the moving averages are. They're tight. Okay? And from there, you can determine the price range, number one, obviously. Okay? But once you understand the price range, then you can also determine how much you can risk. If the range is extremely tight, understand something. And people make a mistake here. They think, oh, the Bollinger Bands are so tight. They're so tight. No, I can take more shares and not have to worry about it. But that's tricky in this market. And what the algos love to do, guys, is they love to tap the lower Bollinger Band and spike it up. Look at the SPY for the last 2 days. What have they done on the 60-minute chart? They've tapped the lower Bollinger Bands, 183, 182.50, and then they jam that sucker 50, 70 cents into the close. So understand that just because Bollinger Bands are tight, you can take more shares. That's not the case. And oftentimes, you're going to see them try to head fake it to the upper Bollinger Band, suck in longs who think that they're going to get a breakout, and then absorb them and flush them right back down. Why? Well, because that generates liquidity, right? The best way to generate liquidity when there is no volume, okay, when there are fewer participants, is what? Fake the breakout, fade it completely, absorb them, trap them, and then ransom out that liquidity. Okay? That's what these algo programs do, guys. So that's why you have to know ahead of time. You have to realize ahead of time, this thing has the potential to mini pup. Now, when you get a mini pup, that gives you a better idea of what type of upside this thing has should it move against you, which is the Bollinger Bands. But because we also have that 60-minute chart, we also know that 60-minute 5, okay, 48.10 to 48.20, that's pretty much the nominal resistance. When we look at the history of that 60-minute chart, there's 2 times where they tried to break it and they couldn't even pretty much wiggle it. All right? And thus, the 300 shares short. Okay, the 300 shares short. That's a light short. A lot of times, it's just to kind of feel it out. Okay, because we wouldn't be going the full lot. We wouldn't be going 1,000 or 1,500 shares short now. Okay, why? Because I have the 5-minute stochastic still trying to mini pup up. I got the 1 minute taking a coil. 15-minute still on the fence. 60-minute still down. Okay, but the near time frames, okay, they take priority. For the 60-minute, it's what we call dormant. Okay, it's like a time bomb, but until that trigger is triggered, okay, until the clock starts going, it's dormant. When they all come back down, then this becomes the trigger and the detonator. So at this point, we're in the trade, okay, but all we're doing now is we're just simply measuring it and gauging it. That's all. And one of the things I like to say, is who better knows how weak a stock is than someone who's long, and who better knows how strong, or I'm sorry, who better knows how weak a stock is than someone who's long, right? Who better knows how weak a stock is than someone who's long, and how strong a stock is than someone who's short? Well, at this point, look at the SPY. I got a 1 minute mini pup spike. I got a 5 minute that crossed up trying to form a pup. Got a 15 minute trying to form a pup. Okay, so SPY is taking a spike here. But where is the spike on CarMax? So right there, when I get 3 lanes on the SPY on the stochastics thrusting up, CarMax should have immediately made a spike to at least retest the 60-minute 5. That's a tell. Okay, that's a tell, guys. And so seeing that it would not uptick, in fact, let's just replay that segment right here. Okay, because what we did at this point, saw the SPY, right? Look at the 1 minute mini pup. Okay, 1 minute, look at the mini pup. Now, what happens is you get the spike, pull back to the 1 minute 5, then the next green candle. Bam, when they spike it, now you got the mini pup. And on that mini pup, look at CarMax trying to correlate with the SPY, right? Look at that. They should be correlated right here, okay? See that spike right here? CarMax should spike right up to that 48.15. And what happened? They came right in and they smacked the bids. See that? They came right in. And they smacked right here at this point. And this is what it boils down to, guys. This is the tell. Okay? SPY, 1 minute, mini pup, trying. 5 minute, pup, trying. 15 minute, already in an uptrend. Look how 1 minute's trying to correlate with the SPY, right? Look at the 1 minute 5. You get a mini pup when you can't break the 5 and you coil up. Look at CarMax coming down in 1 minute 5, right? Right here, correlated. Right here, correlated. Now, notice as the SPY upticks, okay, and CarMax tries to uptick, look at that. What do? They come in and they overshoot and they slip the 1 minute 5. Bam, right there. And it's on that tell that we went ahead and added 900 more on the short. Right there. They should have held that 1 minute 5. And even more so, and as you get a little more seasoned, y'all, you'll understand exactly what I'm saying. When you get the 5 minute that's powered with a mini pup, this thing should have squeezed. Look at the SPY. It's pushing 5 minute mini pup, 1 minute mini pup, okay? This is such a major tell right here. It's within this 1 minute time frame right here. 1 minute span right there gives us the tell. And it says the sellers, as we get closer to 3 p.m., okay, they're getting nervous and they're not letting this fly. When you get a 5 minute mini pup, 90% of the times you're going to get that spike through the upper Bollinger Bands, okay? Unless the SPY is selling off. Unless there's a lot of sellers. You understand? So the 49.10 couldn't break. Meanwhile, as the SPY forms a mini pup, now SPY is in a tight range, okay? 2 to 3 cents, but still, stochastics, they're pumping for a mini pup. And now as the 1 minute starts to peak or starts to push on that mini pup, but on CarMax, you get the resistance here. Okay, now as we get closer to 3 p.m., we realize, hey, we need to get in early now. Because what do you think is going to happen if the SPY pulls back? This thing's got a sell fade. It's going to collapse, or it should collapse. Okay, so let's go ahead and kind of speed this up. All right, now look at the 15-minute chart. Okay, now it's starting to potentially cross down. The 60-minute chart, okay, that has not broken on the 5, right? Now understand something. At 3 p.m., we get a close on the 1:15, 1:5:15, and 60-minute charts. So the 60 minutes going to update. And on that 3 p.m. update, if this thing stays low, guess what's going to happen? That moving average is also going to update lower. So the air is slowly getting taken out, right? The suffocating, basically, is what's going to happen if they cannot break and bust through the 60-minute 5-period moving average. Now, a lot of times, okay, you're gonna, the algos, they know this, and what they're gonna do is they're gonna wait like a minute at 2:59 p.m. and they're gonna try to spike it up, knowing that there's sellers, but they're gonna try to spike it up, and by that 3 p.m. candle close, it'll still close above that 60-minute 5, and that can change the whole game. I mean, you know how they say, any given, like in that movie, Any Given Sunday, football, right? It's a game of inches. With trading and these patterns, it's a game of literally pennies on the candle closes. Okay, because there are programs, algo programs that will go by these closes. So you get that spike through that 60-minute 5 and close it above that 60-minute 5. In a situation like this, guys, okay, well, you got a 5-minute mini pup that'll support it, and you have the 15-minute on the fence that could cross up. So it is possible to push CarMax up if they can close above 48.20, okay, in the next 9 minutes. Now, explaining to you that it's easy to be able to do that, and if it can't do that, what does that tell you? See what I'm saying? On the surface, I'm explaining this to you that it's not that hard for these guys to squeeze CarMax here, okay, on any given day. And on any given day, I would expect it with a 5-minute mini pup. Seen enough of these that 80% of times when I see something like this, this thing is going to squeeze. It's going to pop. It's going to pop at least to the upper Bollinger Bands. 80% of the time, that's what's going to happen. So if it can't happen, that's the other thing you got to keep in mind. If it can't happen, what does that tell you about the sellers? What does that tell you about the bears? It tells you that they're very, very strong. Okay? That's the clue you want to take away from the tell. Now also take a look at the SPY. Remember what I said? If the SPY can't squeeze higher and this thing's already sell-fading, what's going to happen when the SPY is coming down? CarMax should come down. Okay? Now, in order for CarMax to actually collapse, it's going to need that 5-minute to come down. And it's at this point where you want to watch the clock. Okay? Every 5-minute candle close is going to have an impact on this stock. Notice the volume. Very quiet here. Very quiet here. And you want to be very careful spinning your wheels and getting chopped around when the volume is so light. Okay? Moving averages are flat. Now, going back to the mark theory, okay, traders who may be just pulling up CarMax, they see it on the ticker, they're going to say, oh man, there's nothing here. There's nothing here. It's flat. It's nothing here. And move on to the next stock. But you know, or I know, okay, that, well, if you're only looking at the surface here, yeah, it's flat. Okay, and if you only gave me 3 charts to look at, I'd say, oh, there's nothing there. And I'd move on too. But there is one other chart that sticks out, and it's this right here. Look how clean that 5-period moving average on the 60-minute has rejected the bounce attempts. Look how clean that is. This is the true line in the sand. This is the line in the sand. Okay, that's that the fund managers are going. Well, it's going to measure the fund managers. And when they cannot break back up through that line in the sand going into the last hour, and the stochastics can't cross back up, then you're going to get panic most of the times. So now you got the 1 minute mini inverse pup, and as we head closer to the last hour, okay, now at this point we're short 1,200 shares, but I already know my downside here is going to be the 48.20 area. But the other thing is that the SPY is also starting to erode. The upside pressure is starting to erode. Now notice the clock, 2:55 p.m. Look at CarMax, already starting to lean down. Look at the volume, guys. Look at the volume. See how the volume is spiking now? Okay, once again, what lurks beneath? You got the 60-minute mini inverse pup, 15 on the fence. If that 5 and all the hopes and dreams of the bulls that are expecting a recovery in the last hour, that is all hanging on this 5-minute mini pup. We get liquidity, we get the leans, and we go ahead and we scale out 700 shares, 47.91. Okay, we scale some out as we get a big volume bar down. Okay, because once again, is it possible for it to get a reversion coil? Absolutely, it's possible. And if you know CarMax, you know that that thing is kind of thick. Okay, so that's a good move. So 700 out. And as we get closer into the last hour, now it's 2:58 p.m. and understand what 2:56 p.m. What happens on that 3 o'clock mark? We get a close on the 1, 5, 15, and 60. And based on that close, that's going to determine what happens to the stochastics, number one, and what happens to the moving averages, because they also update lower. Okay, if they hold it down. Once again, it all goes back to the 60-minute. Now look at the 1 minute. The Bollinger Bands were tight, okay, chopping pretty much in a range. And now we get the first lean down, coil attempt, counter candle, and then a rejection of that counter candle. So what we have here is an expansion, a Bollinger Band expansion. When you get that expansion, you got to ask yourself, what direction is it going to go? And remember, the algos, they're notorious for hitting that lower Bollinger Band and spiking it back up. And if I only had a 1 minute chart, okay, it'd be hard to play this. But because we utilize multiple layers to get a panoramic view, I already know that, first of all, that 5 minute was the only lifeline this stock has had. The only lifeline to keep it up. If that 5 minute crosses down, and this is what we call the boss chart. See, look at that. CarMax, now it collapses, well, starts selling off. Why? Because the 5 minute gave up the goods. Even though the 60 minute has a mini inverse pup, 15 minutes on the fence, it's that 5 minute, it's the 5 minute that was pretty much holding it up. If that 5 minute crosses down, forget about it. No more support. And now what you end up is what? 1 lane down, 2 lanes down, 3 lanes down, 4 lanes down. 4 lane down convergence. You see that? And you get the mini inverse pup, you get a inverse pup, and a 60-minute mini inverse pup. You get 3 of those lined up. That's what we call a perfect storm. And thus is your perfect storm breakdown. Now on CarMax, we still got 500 shares. Now, here's the other thing you got to keep in mind. Okay, when the 1 minute gets to that 20 band, it's either going to coil or form a mini inverse pup, which is a climax, short-term climax sell-off. Okay? So you got to be prepared ahead of time for that sell-off. The nominal downside you can measure by just looking at the lower Bollinger Bands. 47.80 is a nominal downside on this. So that's why we put in a little limit order at 47.84. Could it go lower? Yes. Okay, of course it can go lower. It can overshoot. But remember, liquidity overrides price. Okay, thunder and tumbleweeds landscape, liquidity overrides price. Plus, don't forget, this was December 20th. Okay, the last 2 to 3 weeks of the year is the driest climate pretty much of the whole year. the least amount of participants, because everybody, well, the humanoids, they're off on vacations. Right? They're celebrating holidays. Okay? Us mutants are still here, along with the algos. So that's why you always want to be careful whenever you get a low band lean through that 20 band, when that 1 minute gets to a low band, because the algos just love to jam it up. But like I said, we've been sitting here and watching, and the algos had every opportunity to jam it up on that 5 and the 1 minute mini pup, and they could not break the 60-minute 5. Okay, now that observation I gave you, that's the surface. Going back to that iceberg analogy, that's the surface. But what lurks beneath? What does that tell you when an 80% pattern of a spike just doesn't make the spike? It just doesn't get the spike. What does that tell you? It tells you that the other side is stronger. This is a minus-sum game. A minus-sum game. So one side is either going to be winning. Well, one side's always going to be a winner, and the other side's always going to be a loser. But the losers are going to outnumber the winners. It's a minus-sum game. And as I talked about the SPY being a benchmark to compare your performance of your stock that day, okay, the pup patterns, the mini pup patterns, and especially perfect storms, as you get more acclimated and seasoned with the methods and the training, okay, that is a measuring stick. That is going to be your benchmark to be able to gauge, just like we did here, to get the early tell. Hey, this is a 5 and the 1 minute mini pup. 80% of the time, this thing's going to spike. It should spike. Even if it's going to go lower, they should spike it. One of the things that the algos love to do, guys, is they love to mini pup. They love to jam it hard. They love to jam it hard enough to form a big star so that you get the spike and then an immediate cross down. Okay? Well, they love to dump a stock really, really hard, as hard as they can, so that the reversion spikes so hard that not only do you get a hammer, but you also get the stochastics that slingshot and cross back up. It's all about that cross, okay? And a lot of programs, figure, hey, let's just go ahead and panic them out and lean it as hard as possible, okay, so that we get that reversion coil, and then the stochastics cross up. It's when that stochastics cross doesn't happen, that's where the problem lies. Why? Because all the sellers are not out. And what happens to this? What are the sellers doing? They're anticipating that reversion spike, and they step right in front of it to bleed their orders, to bleed their shares into that liquidity. Okay? Understand that. So we got hit on the 300 shares into liquidity. 1 minute's riding the low bands. Okay? 5 minute has firmly crossed down. 15 minutes sloping down on 5. That's an inverse pup. And a 60-minute mini inverse pup. So now this is what we call a perfect storm, guys. A perfect storm. I have 3 inverse pups and mini inverse pups. Now, this is transparency. This is the transparency right here. Okay? But you see, when you look at CarMax, okay, you got to understand that there's a thing phenomenon that I call stinky 250s levels. Okay? 4750 is a default stinky 250s level. But you got to add in 10 cents overshoots on both sides. So 4760, 4750, 4740. Stinky 250s levels. So if you see this perfect storm and you jump in and you short this thing at 4772, which a lot of traders will do, okay, because they don't have the rifle charts, they're in for a rude surprise, because either they're going to get the hard lean straight down, which is very rare, or they're going to get a lean to that 4760, 4750 area, all right, and then a reversion spike off that area. So this would be a late entry, but it's a perfect storm breakdown. Okay, it's the same perfect storm breakdown you see in my books, right? Same perfect storm breakdown you see in the videos, but there's a difference. Remember, it's about transparency. And the reason why I came out with my last book, Tactical Applications of the Methods, is because you can't make money when perfect storms get full transparent. Well, you can if you're lucky and you chase, okay, and the thing continues to go. But at this point, the transparency is full blown, okay? In order to make money, you've got to understand what lurks beneath and be able to position, step in, and then hit it when you get the tell. The tell. Remember that tell? On the 1 minute mini pup, almost had a perfect storm on the SPY, and CarMax tried to correlate, gave the image of correlating, and then bam, sellers came in early. They didn't nail it down, guys. The fact that they stepped in showed me how nervous they were. And we got in. So, just to break it down, okay, CarMax end of day dumper short. We had the 60-minute mini inverse pup as the anchor, 15-minute ultimately inverse pup, 5-minute formed an inverse pup, 1 minute formed a mini inverse pup, 4 lanes to downside, self-faded the SPY. What happened to SPY? Look at the SPY. Collapsed. 5-minute cross down, down. And then we basically covered into the liquidity. 48.04 average, covering into the liquidity down to that 47.71 area. Okay, just ahead of that 47.60 area. And that is what's known as an end of day perfect storm short. Now I know that a lot of this is, like I said, over your heads for a lot of you. And those of you who are still around and still awake, I commend you. Okay, but this is the thinking that's going on, you know, in my head during these trades. So just to break it down for you, you know, we basically stepped in, we took it short. 60-minute 5 was the anchor. Okay, and we simply waited until we got the tell, and we stepped in just ahead of everything, all the lanes coming down. Okay, and then by the time we got our full position in, we still had some time as we got closer to that 3 p.m. But notice something, guys. Okay, look what happens at 3 p.m. Yes, it collapses, all right, but you don't get a reversion bounce at 3 p.m. See that? Everybody's jumping in front of everybody else. So you don't get too many upticks to short it. And that's why you got to step in earlier. You got to be able to game them. You got to be prepared and ready to step in on that earliest tell. It's so subtle. Okay, but once you get that, once you spot that tell, it's, you know, you can literally just close your eyes. All right. But that's just me talking. Okay. For you guys, you know, it's going to take some time. Like I said, there's a seasoning process that you have to go through. And there's the P&L, there's the gains on that particular trade. 225 profit, 30-minute trade. But you see, once again, the numbers, they don't matter. Okay, the money, the numbers, they shouldn't matter. Okay, what matters is the essence of that trade. What matters is the scaling. What matters is catching that tell. What matters, okay, is being able to time it and to buy into that liquidity when everyone else is seeing that perfect storm and they say, oh, this is a perfect storm breakdown. And they're stepping in, you're selling, you're covering into them. Okay? That's the essence of trading. That's the essence of the trade. Now, remember what I said about the Stinky 250s levels. Here's a snapshot of what happened afterwards. The SPY continued to sell off. Look what happened to the SPY, guys. It peaked out at 182. Okay, remember the 1 minute had that mini pup, the 5 minute had that mini pup, right? Peaked out at 182, and then SPY continued to sell off, got a mini inverse pup, all the way down to 180, 150. So with a sell fade on CarMax, you expect this, if the SPY comes down, you expect CarMax to sell off, right? Which it did. Remember the Stinky 250s, 47, 60, 50, 40. Okay, that's going to be your best case scenario. And sure enough, CarMax leaned down to the 47.50 area. Okay, look at that. Just as the SPY sells down to the lower Bollinger Band, 180, 175, chops, and then eventually chops and sells off to the 180, 150. So you would naturally expect CarMax to sell off much lower if the SPY is coming lower, right? Look what happened. The SPY sells off and CarMax spikes from 47.50 all the way up to 48.40, guys. Look at that. Look at that spike. Okay? So everyone else who sees the perfect storm, and they finally see the perfect storm on CarMax, and they come in and they short this sucker at 47.70, 47.60, if they're not aware that you've got, no matter what, I don't care what the chart looks like, you've got to respect the stinky 250s levels. If you're not covering into that, okay, if you're not covering into that, remember what I said about the mark. You don't know who the mark is, you're the mark. As the SPY leans lower, okay, the algos come right in and they just spike this sucker. Look at that. SPY hits lows. CarMax squeezes to 48.40. How sick is that? How sick is that? And the difference, once again, between being a victim, all right, and a predator, it all boils down to your base, your galvanized base, okay, beneath the surface. And I've touched upon literal versus lateral thinking. Okay, literal is the surface, tip of the iceberg. Everybody sees it. Everybody knows it. Hey, look, futures drop 6 handles. I know the market looks weak. Okay, it's not what I'm worried about. SPY drops 60 cents. What I'm more worried about, or what I'm focusing on, is it's not, oh no, the sky's falling. Okay, it's, oh yes, the SPY is nearing that daily 5-period moving average, which has a mini pup, which is where this sucker could bounce. Okay, so as everyone else is panicking, we're looking for the liquidity. Literal versus lateral. Surface versus what lies beneath. And as I mentioned earlier, a template, okay, is when all your sequences together form a template, and all your templates form your behavior. And so it all boils down to, being guided in the right direction as far as the 4 stages of trader evolution. Okay. The acclimation stage, that's where you learn the basic materials from the ground up, the basic stuff. A lot of people, they start off with the basics, they get all interested in that, then they immediately want to jump to the season part. It's the conditioning part, the repetition, the routine, the rituals that you got to go through. That takes the real effort. That's the real preparation. This is where people tend to kind of forget about. Start off anxious here, try to skip through here to get here. And then that's when they get nailed. They blow out. It's a 4-stage process. Okay, so bottom line is that the training, specialized training, is what's needed in today's market landscape. Okay, the end of day dumper, that's just one setup that is in our training program. But like I said, your training has to be comprehensive, cumulative, okay, and you're the only one who can determine that pace. The materials are there with our program. Okay, they're fresh, applicable content for today's markets. The Alpha 7 exclusive trader training program. Video course alone has over 30 hours. Okay, over 700 slides, live action videos, just like you saw. Complete breakdowns. But we want to get you to the point where you understand everything I said in that video. That's what it boils down to. Okay? Anyone else who sees that video, they're going to say, oh, that was pretty cool. It was a good trade, Good trade, 30 minutes worth of work, 200-something bucks. That's the surface. They don't understand the thinking behind the trade. All right? And to get to that point, you've got to build your foundation. Enough said. So Alpha 7 Trading Academy. For more information, you can contact Alpha 7 Trading Academy. Here's the phone number, or you can email them, sales@alpha7trading.com. Now, ChoiceTrade has a special promotion with Alpha 7 students. Okay, so make sure you contact them if you're interested. You get a free sample lesson, and we'll get you on the right footing. Okay, so if there's any questions, I'll go ahead and take questions now. And like I said, everyone, I know that it may have gone over a lot of your heads, that's a good thing. Okay, that's a good thing. Hopefully, it's something that's gonna kind of stimulate you, or I fired up a couple synapses, okay, or at least filled a couple voids, as far as your understanding of price action and the psychology behind that, and how to game it. Okay, everyone can run a scanner and see what's making new highs or making new lows. Right? But just because a stock is making new highs doesn't mean it's going to go higher. Just because it's making new lows doesn't mean it's going to be going lower. In fact, that's tip of the iceberg. Okay? The algos know, hey, if we jam this sucker, make new highs, we get more publicity to advertise this action. Means more participants. Yeah, Mitch, this is a DOS trading platform, which ChoiceTrade also has. Well, ChoiceTrade has DOS trader platform as well. Okay. So ChoiceTrade DOS trader platform, it's $125 a month. However, if you trade enough volume, right, that fee gets discounted. Yeah, Mbe, you know what? As far as the order routing, it's gotten so complicated these days. Okay, basically, I pretty much just prefer, when available, Island. I hate to use Arca, but you know what? It's efficient. It's fast. If you have a smart routing capabilities, just use that. Well, all right. As far as hiding your size, it depends on the time of the day and obviously your size, okay, and the stock. But in most cases, yeah, you know what? Most cases you just set it to hide. Okay, you don't want to become too obnoxious with it. Once again, depending on the stock. But yeah, everyone's hiding their orders these days anyway, so you can just set it to show 100 shares and leave it at that. Okay, yeah, guys. As far as the pricing for the training course, give Alpha 7 a call. Okay, they have pricing information. They've got payment plans and discounts. And once again, I want you guys to understand something. I'm not someone who goes out and I'm not one of these marketing guys that's going to spam you. I'm not going to come out and just spam you with email. And neither are these Alpha 7 guys. Okay, they're not going to spam you. In my webinars, goes back to the law of reciprocity. All right? If you're going to take the time out of your day to share, to give me 60 minutes out of your day, I better make it worth your while. Okay, or else, if this whole thing is a pitch, I'm not going to do it. I'm not going to sit here and pitch you for 60 minutes. So hopefully something was good for you, even if you don't take the course or anything. Something triggers. It's the weirdest stuff can trigger those synapses. So hopefully something triggered for you. As far as any information about the pricing and anything like that, make sure you contact Alpha 7. There's the link right there. Okay, so make sure you give them a call or email them, and they'll give you more details about the pricing and stuff like that. Mbe, thank you for reading the book. I'm very, very touched that people once again would take the time out of their day and out of their lives to read through that. So I appreciate that. There you go. It's good to hear, CP. Thank you, Mitch. Thank you, Mbe. Thank you. I'm touched. And keep in mind, everybody, that the wet climate is going to be in that first 30, 45 minutes of the day. Make sure you kind of tone it down and be frugal with your ammo during the middle of the day, which I call dead zone. And then the last 90 minutes of the day, start watching those end of day dumper or gapper patterns around that 230, 245 mark. Yeah, we're still here. Yeah, we're still here. I got guys who've been with me for over 12 years. I got guys with me that have been around since day one. But a lot of people have fallen through the cracks, you know, and that's, like I said, that's one of the reasons why I released the last book, because it's the application of the methods. That's really the important part. And, you know, to be very, very, very honest with you, putting together the cumulative material from the smallest pieces, from the smallest elements to build that galvanized foundation. Okay, I put everything into this course working with Alpha 7. So it's pretty comprehensive, guys. And it's going to start real slow and speeds up gradually. It was a major project for me. So for those of you who are up for it, it's there for you. Mitch, I use the stochastic for my momentum indicator. I got some good trader friends that swear by the MACD and RSI. I just never really got into that. I started with the stochastic, you know, and went through many years of trial and error, and you know, the divergence, you know, really made me scratch my head a lot. You know, why does the stochastic, you know, move a full 80-20 band, accounting for a $2 move in a stock back in the old days, versus the full oscillation, you know, that full oscillation only accounted for, you know, half a point, you know, and it always drove me nuts. But when you add those moving averages in there, then it makes sense. The stochastics, you can't blame it. It's not a price indicator, it's a momentum indicator. Okay, so if the momentum is strong and you're playing an existing uptrend long, you're going to get more momentum to the upside, more price movement. If you're playing the momentum bounce, but the stock's in a downtrend and it hasn't broken that 5, okay, it hasn't broken that 5, your upside is going to be limited. Now, once again, to get a little more lateral, a little more layered, if that 5 period moving average has solidified, that can become a support. One of my favorite patterns is a downtrend, right, where the 5 period moving average gets broken, spikes, pulls back, gets that counter candle, and then the 5 period moving average not only holds, but starts to slope up a little bit and forms a mini pup. That's a beautiful pattern because now you have a dormant downtrend that's actually tightening its channel for a potential reversal. Okay? Simple moving averages. Yeah, level 2 used to be effective back in the days, but you know, I still use it. Still use it for price action, right? For price and tape action, exactly. Okay, guys, I'm gonna go ahead and I gotta wrap this up. Once again, I thank you guys for attending. If you have any questions, please give these guys a call at Alpha 7 Trading Academy. All right, and I thank you all for attending the webinar tonight, and I will see you all, talk to you all later. Thank you, everybody. Good night.